Today I'm going to reveal the strategy that has been helping me capture 100 pips every single day. I never teach what I never do, and if I'm making any mistake, I always tell you. So for those who have subscribed recently, thank you so much. Feel welcome. I'll be dropping a ton of knowledge every single time. Alright. So if you're new here, make sure you subscribe down below, and also make sure you like the button right here. Alright. So make sure the like button, the thumbs up is blue right here. All right. So today I'll be teaching you, if you can look right here on this side, I have a trade running right now using the same divergence that I'm going to teach you. All right. So it's a we are in a downtrend, and still the market has formed a very good, a very potential a very potential hidden divergence to the downside, right? So I planned on doing a whole series on this, the entire strategy. So we'll first be focusing on the hidden divergences, then the reversal divergences, and then I'll do a third video on how I use the Fibonacci entries to know the perfect entries and to highlight the stop loss zone. All right, but more so, I'll give you a small clip giving you an idea of how I do it before I do the entire strategy on the perfect entries. All right, so make sure you stick around, subscribe if you haven't before I come back. So make sure you subscribe. All right, thank you so much. As you have seen the market on the market right here, as I've shown you right now, it's not as difficult as most people claim to be. So if you want to have confidence in trading, very high confidence in trading, you need to have a very good strategy, right? So if you have very good strategy that you trust and have full confidence in, your psychology is normally very stable. You have confidence in everything that you're doing. You will have the patience to wait for the trade to work for you. Why? Because you have the confidence in the strategy, right? You know what you did is right, all right? So even if the market stays in the on the stop loss zone for long, you don't care. Why? Because you know it will still work for you. And if it doesn't work for you, you know exactly what to do, or what to do and when to do it. All right, so you know when to react. All right, so that is the importance of having a very good strategy, a very profitable one. All right, so most of the time this strategy works perfectly on GBPUSD. All right, and maybe sometimes Aussie dollar, but most of the time I use it for GBPUSD only. All right, so it helps me catch around 100 pips almost every single day. But every time I try to deviate and use other strategies, I lose money. All right, I lose money. But this strategy has been working for me very well, very well. All right, so make sure you follow this, make it your strategy, backtest as much as you can fully. So make sure you backtest wholly. All right, it will be very helpful for you. And also, if you have any question, comment below. If you are new here, make sure you subscribe. Don't forget to turn your like button blue. It will be very helpful for you. All right, it will also encourage me to bring on more content. All right, so go ahead. Thank you. First, we need to understand on how the hidden divergences work, or maybe what the hidden divergences are. All right, so let's get started right now. All right, first let's get that out of the way. All right, so if the market is moving, making higher highs, right, and we have the moving average also facing upward, so you expect the RSI to be making, once the market is making some higher highs, the let's say we are right here. All right, and the RSI indicator has its low point, forming some lower lows. All right, so the market is making higher highs, and the chart, the RSI is also making some lower lows. All right, that is what we call a hidden divergence. All right, as you can see, this is what we call a hidden divergence, which shows clearly a continuation of a trend. So when you see a hidden divergence and the market is already at a 200 moving average, simple moving average, you just buy at around that zone. I'll be teaching you how to enter using a Fibonacci retracement 61.8, having the stop loss zone marked between the Fibonacci 61.8 and the 76.8. all right, so once you get at 61.8, you wait for the market to move higher. So as the market rises, pulls, you continue trailing your stop. Why? Because you never know up to where the market will go. All right, so sometimes I've been closing trades using a Fibonacci extension, where I get maybe I close most of my trades at 70 pips, 100 pips, and then the market continues all the way to maybe 200 pips that in that particular day. All right, so the best thing I've come to learn last week, I've been thinking of how maybe I can deal with this situation of closing trades high. All right, So I've been working on this over and over. So I've planned on how I'll be trailing my stops manually. After I rise, pull back, rise, stop loss, I'll just raise the stop loss. Rise, pull back, rise, continue trailing the stop loss. All right, that is how the strategy works. So if you completely gotten how the hidden divergences work, right here, as you have seen, the market is forming some higher highs right here, some higher highs, and the RSI is forming some lower lows. All right, sorry, the market is making some higher lows right there, and the RSI is making some lower lows. All right, that is what we call a hidden divergence, and it is very, very powerful, as you will see right now. All right, so let's get on the chart. So here on the chart, as you can see, let's start here, maybe here. The market was right here, and it formed higher low. All right, the market was also, all right, the market was right there, right here, formed some lower highs. All right, first the market was in a trend, downtrend, all right, right here, and then the market forms a reversal divergence. I'll be talking about that in the next video, so make sure you subscribe and watch this video to the end. All right, so if you subscribe, you get to know when I post the next video on reversal divergences, which are very, very important on identifying when the trend is coming to an end. It helps to be a warning on when you should not trade anymore on that particular direction, right? And start looking for opportunities on the next direction. So the market was in a downtrend, and then the reversal divergence occurred right there. I'll be talking about that later. Then the market started forming some lower highs, all right, right there. But if you can see, the market here formed some lower highs, but it formed some lower lows right here. So that was a clear indication of a continuation in the uptrend, and the market had also pulled close to the moving average, right, to the 200 simple moving average, right? So that was a very strong confluence on the moving average and also the hidden divergence, right? So with that, the market spiked, right? And then we had the market coming back close to the moving average and forming a hidden divergence. Again, clear one right there. The low points are going higher right there, and the low points on the RSI are going lower. So all right, so you can see lower and high. All right, so that is a clear indication of a rising trend on the same trend that it is going through. All right, so that is it. As you can see, we can start here, maybe measuring here. Let me pull out the horizontal line right there, right there. So the market you bought right there, all right, and the market rose all the way to here. So as you can see, from 2303 to 2410, that is 107 pips. All right, that is in one single day. So if you see these lines, they divide the days. They are just there to highlight you the different days that are happening. All right, so make sure your like button is blue. All right, it will encourage me to continue dropping more and more content, right, for you. So make sure you also watch this to the end. It is very, very helpful. If you are new here, make sure to subscribe. All right, so that is it. If we look at the second day right here, let's look at the second day right here. We saw a hidden divergence right here, right here. I don't want to make this video too long to be boring for you, so that's why I'm rushing, and that's why I did not want to make this video a very long one, explaining everything, including the Fibonacci's and the reversals. I don't want to confuse you guys. So the first thing you need to understand is this simple stuff. All right, the hidden divergence, then we move to the reversal divergence, and then the Fibonacci, right? So after that, we can count from here. The market went all the way to there, and then we bought around there. We bought around there. So at 2367 all the way to 2467, that is 110 pips in one single day. As you can see here, one single day. We had this 103, 107. Those are 2 days consecutively. This was on a Good Friday, so the market did not move. All right, the market did not move. And then we can measure, also have this and this. All right, the market will always make you a lot of money if you follow the right thing. Right, that's what I've learned for over the 2 years that I had been failing. So this is another trend, a good one. But remember, we have another reversal divergence right here. I'll be talking about that later here, which indicated a trend reversal. I'll be teaching you that later. So if you subscribe, it will be very, very helpful for you. So let me show you what I'm telling you, what made you click this video, why you saw on the 530 pips in one single day, right? So let me show you what happened. Pull the trade. So we had this trend right here. The market was moving so well, smoothly to the downside. As you can see, if we measure from here to here, yeah, this day right here, it is at 28.13 or maybe 28.13, yeah. All the market dropped all the way to 24 to 24.97. So let's say at 25, 1.25 and 1.28. So that is 300 pips in one single day. One single day, 300 pips, one single day. The second day, right here, we can measure that right here using the same strategy of hidden divergences. This strategy is very, very powerful. As you can see right here, the strategy is very, very powerful. Low and moving higher. Boom. Let's measure that also. It's at 23, let's say at 23, and this one at 26. That is another 300 pips the second day. That's 600 pips in 2 days. Just 2 days. Let me show you another thing. So the market did not move well this day. So maybe you made some little money, or maybe lost a few bucks, or maybe didn't lose anything if you are able to manage it very well, right? So let's come over to this day also. Right here, we can measure how many pips that you could have captured that day. All right here, this day, let's say at 1.2 2020, let's say 2020, and at 22.46. so that's approximately 230 pips, 200 and around 30 pips the third day. So the first day 300 pips, the second day 300 pips, the third day 200 pips. That does not even include compounding. It doesn't even include the compounding, adding more positions as the market works for you. All right, this is purely it's purely on one single trade. So you have already captured around 800 pips in 3 days. All right, so let me show you another thing, what made you click on this video. All right, so on this other day the market moved really well, all right, before it then formed another reversal divergence right here. What I'm talking about, reversal divergence, that will help you know when the market is about to reverse. This strategy is very, very powerful. All right, as you can see, we still have a hidden divergence right here, moving down, and this one is moving higher, so indicating that the market will be moving lower. All right, so normally this trade works very good 2 hours before the London session. It's normally at 8 in my country, right? So at around 8 right there, you place the trade. All right here, and the market moved all the way. So let's measure how many pips we got that day. All right, so the market came all the way to here, and we got it at around 8. So let's check. So at 1.21, let's say at 1.21 minus 1.155, all right, so 50, so that is like 21, 20, 19, 18, 17, 16. So that is 550 pips in one single day. This is a 15 minutes chart. So as you can see right here on GBPUSD, right here, all right, that is one single day, 550 pips. That was incredible, right? This strategy works so well. All right, I've been using this strategy for quite some time now. I started making money after I started making money using this strategy. As every single beginner trader does, I started skipping to other strategies, so I started losing money. After I came back to this strategy, I've been making money, hitting consistently for the 5 months I'm talking about, consistently, right? So if you follow this, it will be very helpful for you. So make sure you subscribe. More and more deals to come your way, right? I'm revealing so many things after this, right? So make sure you subscribe. It will be very, very helpful, right? So after that, the market formed a hidden reversal divergence right here. I'll be talking that on the next video, so make sure you subscribe. If I made that on this video, it will be very, very long. And as you can see, the market reversed and started rising again. All right, so it's very, very powerful. As you can see, we have another hidden divergence right here, as you can see right there, and the market rose, and you make lots and loads of money right there. All right, you can see another hidden divergence right here. All right, all you need is an RSI and one simple moving average. Very simple strategy. All right, anyone can do this, including you as a beginner trader. You should never fail in this again. You should never fail in this again. I'm going to reveal everything, 100 pips every single day. It doesn't matter how big your account is. This strategy works for anyone in the 7 figures, 6 figures, $10 account, 500. I've done a video on how I flipped a $10 account to 300. It's my first video, so make sure you can also check on that. All right, the link will be in the description. I also have a WhatsApp group, a free one, that I post my trades almost every single day. It's down in the link also. All right, so I've also taken a trade right now using the same strategy. As you can see right here, we have a hidden divergence right here, right there. So I expect the market to push to the downside. So I've already sold, taken a sell position right here, a sell position right there. All right, so I expect the market to move down, and then I will keep on scaling more positions as the market gives me more money. All right, so I hope this was helpful. All right, I hope it really helps you. I hope it helps you to bridge over to the winning traders. All right, I've been consistent for 5 months now after failing for 2 years. I just want to help you. I don't want anything. All I am asking for is for you to subscribe. All right, just subscribe. All right, make sure you subscribe. All right, it will be very helpful for me and for you. It's a win-win, by the way. It's a win-win deal for me and for you. All right, so without further ado and wasting much time for you and giving you more time to backtest, first watch this small clip right here, giving you an idea of how I use my Fibonacci. All right, and then go ahead and backtest the strategy. If it works for you, make those loads of money. All right, thank you. While using the Fibonacci, this is it. I'm giving you the two trades that happened yesterday and today that were very high potentials. All right, so this is my Fibonacci tool. I've deleted all of the other Fibonacci numbers. I've left only two, 61.8 and 76.8. All right, 61.8 and 76.8. Right, those are the only two numbers that you need on the Fibonacci. All right, so the market was right here. I saw this move right here. All right, after this hidden divergence right there, indicating a drop. So the market dropped right here. So I then added put my Fibonacci right there. Let me pull it for you, zoom in for you. All right, right there. Right there. All right, so the market pulled all the way. After dropping, it pulled all the way where I could have put where I put my sell limit. We normally use the sell limit orders. Once the market comes to you, triggers you, boom, it moves. As you can see, if we zoom in, the market just triggered the sell limit order and then dropped very hard. All right, you can see that the market dropped very hard, very hard that day. Yesterday, it's yesterday. I'm not talking about so many days, maybe last year or maybe other months. Most of the traders will pull things that happened long time ago to show you something that is potentials. All right, so I'm showing you what happened yesterday and what has happened today also. All right, so that is it. This was money. All right, right there. So today the market then dropped again, as you can see. The market dropped and I expected a pullback all the way to this zone. All right, so I pulled my Fibonacci again, brought it here. What I'm trying to measure with this is the retracement. All right, so I have to catch the high and the low. All right, so I have to catch the high and the low right there. All right, so as you can see from this, I have highlighted a red zone between the 61.8 and the 76.8. This is my stop loss zone. Once the market spikes above that and closes above that, I'm just closing the trade automatically. But I still have my hard stop loss here in case the market misbehaves. You never know what will happen in the market, so you have to protect your equity. So I'm not using this stop loss as an exit zone. All right, I'm using this stop loss zone as my exit zone. All right, that is it. So as you can see, the market has pulled all the way, triggered my sell position right there, and now I'm expecting the market. It has been staying at the stop loss zone for quite some time now, and I expect the market to now drop. As you can see, we are having some momentum to the downside, so I expect the market to still drop further. All right, so it's all about a matter of time, just waiting, be patient. All right, this is Wall Street, where money should work for you. You don't have to work. All you have to do is wait for the money to work for you. All right, so that is it. A very pure, clean strategy for you. So make sure you subscribe. It will be very, very helpful. All right, that will encourage me to continue dropping more and more knowledge to you. All right, so make sure you subscribe. It will be very, very helpful. If you're new here, share this knowledge, share this channel, and share everything that you believe will help you become a better trader. All right, I'm never jealous. I'll be doing a video on the reverse divergences soon, and also on the reviewing the traders that are very good, the forex YouTubers that helped me grow and develop my psychology and my trading skills. All right, I'll be dropping that in a few days, so make sure you subscribe. Thank you. Watch all the links in the description. I have my WhatsApp group there and a few other videos right there, so make sure you watch that. All right, bye bye. Thank you.